Hey fam, so this week we see that BTC and Ethereum has started to pump up again after all these winter days. As we can see at the current time of recording, BTC has risen 5.7% in this week and Ethereum has given 13% of increase, which is really good. And let's hope this momentum stays forever. And with this high note, we have brought you some this week's updates and let's go through it. Welcome back to Block Talk.
I will fire Gary.
So this week we have the first news as STRC is being described as a perpetual preferred stock, so which sounds very pretty complex, and it's basically a yield product that raises money that is used to make more BTC. So let's hear what is it about from Vaishnav.
Yeah, so STRC is offering from Strategy, the company which is being run by Michael Saylor, the biggest bull of BTC of our time. And if you see, STRC is a preferred stock, not a common equity. It sits between bond and equity style trading instruments. So what it provides is, it has a very attractive yield of 11.5% average yield, which is really good yield. Like even in TradeFi or even in stablecoin networks, you can't get this much interest per year. And how they work is, they have a completely different investor target. Like MSTR, the main stock from Strategy, is for people who are looking for Bitcoin's upside potential. STRC is for people who just need a good yield, which is given out stable by accumulating BTC in real time.
Okay. So what I found more interesting is that the par value mechanism. So it is $100 per peg, and expand more about it, Vaishnav.
So STRC has a stable value of $100 per share. How they maintain is by using like a very common strategy which is used in Siagonara based stables. Like it's a flywheel mechanism. If the STRC's holding value goes above $100, they issue more shares. The shares get sold, and whatever dollars we collect, those are used to buy BTC in real time from market. And if STRC's price drops below $100 peg, what they do is they will temporarily raise the yield so that more capital comes inside and they can pump the price up. So this is how they maintain the peg of $100.
Okay, so like this week, the numbers that we have are kind of staggering. There are about $240 millions of buy pressure in 48 hours from a single instrument, and STRC is now covering about 30% of the recent BTC purchases. So what's with the count and stats, Vaishnav?
So what we can visibly see in order books is STRC's purchases is huge in volume, and STRC as a stock also has very low volatility, much more low volatile than the S&P 500, Dow Jones, MST, or BTC, gold, and etc. And the next thing is, so this is now proving itself as a very confident model, and we are seeing whether competitors who have similar treasury based strategies will copy this model. And the risk with STRC is, if the market is not very much interested due to war or any other uncertainties, this flywheel slows down. The begging mechanism slows down, so that's the only risk which is carried by STRC.
Okay. So the second news segment that we are covering up today is crypto payment shift has happened and MasterCard expands while Ramp puts cards in AI hands. So can you explain a brief?
Yeah. So let's first talk about MasterCard's latest crypto partner program,
Okay.
in which they have announced that they have partnered up with 85 crypto native companies, which consists of payment providers, financial institutions, blockchains, etc. So they are creating a forum where meaningful dialogue and collaboration in the space continues. And this is just a normal announcement in a way. They have not said any specifics of how the partnership is going to move forward. But this announcement tells forward that MasterCard is ready to onboard crypto native businesses, and this is a good sign.
Okay. And we have also found that RAM's agent cards let AI agents spend money instantly using normal cards. So right now this makes stablecoin payments less necessary. So but in the future we have also assumed that crypto could still win if it becomes easier and better to use. So what is your opinion about this?
So this news of RAM enabling AI agents to handle cards might be short-term bearish, because till now we were talking about stablecoin payment rails for agents, which is the most easiest one. We were also talking that to use normal traditional finance like bank, net banking and all, we need some humanitarian person to handle the cards. But now RAMP has enabled a framework where agents can have their own credit cards and debit cards. So this is like then we don't need any stablecoin payment rails because already all the merchants have integrated with normal traditional Visa, MasterCard cards, and there are not much merchants who are very well versed with stablecoins. So this is part-time bearish and bullish news for agents, but the long term what we can see is slowly and steadily when all the merchants get onboarded into stablecoin payments, at that time these kind of agentic payments will get a good time to expand their business, is what I feel. For now, whatever RAMP is doing is a great job. Let's see what else, what kind of other developments we see in this space.
Okay. The final segment that we are covering is Privy Home has been launched in last year August, and this week it went very viral, where people have started posting screenshot of the wallets and balances that they didn't know they had actually. So can you please walk me through the product completely?
Yeah. So this was unexpected. Out of nowhere people started to post like somewhat like Privy has started to give them airdrops. Even I was shocked, like why Privy is giving airdrops. And everybody was saying there's free money out there, just go and claim it. Then I went and watched it. It was like Privy Home. Privy Home is a feature where, let me just give a gist about Privy first. If you go to any Web3 app and you don't have any wallet, then Privy is a software provider where you can connect your socials like X, Gmail. What are the socials we use? These are the two things I use. And Twitter and X are same. Yeah, similar. Okay. So you can connect your social media accounts and Privy will create a Web3 crypto wallet for you using that identity. So you don't need to remember any wallet phrase or handle those wallets. All those wallets are being interlinked with your social media accounts. Then Privy Home is a feature where for every individual app, it will create its own individual crypto wallets. There was not a single place where you can aggregate all the wallets and see their balances in one place. So Privy Home became that place. If you connect your Google account, X account, YouTube account, your normal wallets, it will show you where and all you have enabled your crypto wallets and how much amount does it hold. So what actually happened is people must have created Privy wallets to use some apps. Then they must have forgotten to claim the amount back, or that money exists in some wallet. So while you log in into Privy Home, you can see all those money in single place. So people are now remembering that, okay, I had $100 in that app, some $50 in this app. So they got excited because of this. And Privy now also has some cool features like where you can export private keys, so that whatever wallets was created by Privy, you can take that wallet from there and use it in your self-custody wallets such as MetaMask or Rabi. That's the update.
Okay. So that's a wrap for today's episode, from funding Bitcoin to spending crypto to finding hidden assets. So we have seen about all these in this overall segment. Hope you liked it. Don't forget to like, share and subscribe to Block Talk Podcast, and stay tuned for further crypto updates. Bye.